Hey Patrick.
Hey Mark, hi. How you doing? Long time no see.
Yeah, I'm good. I'm good. How are you?
Yeah, I'm doing fine as well. The holiday was amazing, and I'm back for about a week by now. But last week we had a smaller, let's say, personal health issue. So yeah, we're back on track. We made some adjustments to our podcast, so I'm doing good.
Hmm.
There happened a lot in crypto over the last couple of weeks. I'm pretty sure that we will not get into every single topic, but
That's
yeah, I'm
impossible,
looking
man.
forward to get the ball rolling again. Yeah.
Yeah.
Anything particular that happened in your life over the last couple of weeks that we haven't spoken?
You mean crypto-wise or in
Yeah,
regular?
whatever you want to talk about.
Whatever I want to talk about. Yeah, I mean, I got COVID, I guess. But for the rest, not much happened. But on crypto, on the other hand, a lot of things happened.
Hmm.
So, yeah. And also, I'm thinking of getting into World of Warcraft again, but I'm not 100% sure yet. So I guess that's more like on the hobby side. But for the rest, yeah, a lot has changed though. What
Yeah,
about
a
you?
lot. Yeah, I basically unplugged for 3 weeks on vacation. Uh, it was super, super nice. I saw a lot of things. I had an awesome time with my family. I um I was somewhat in a loop on the big things in crypto. So the Terra stuff, the Luna stuff, which was quite interesting, to say the least. But besides that, it was really good to don't check the prices like 10 times a day. I checked it like once a day, and there were actually times where I totally haven't thought about crypto for, let's say, 24 hours or so, and this felt really good. So yeah, I need to do this more often, I guess.
Yeah, every other month.
Yeah, this would be great. Yeah,
That would be awesome. Okay.
yeah. For our listeners, a quick update. We are thinking about making some adjustments, starting with this episode. So once a month, we will give a rough allocation of our personal portfolio. We will start with this because it's the beginning of June. After this, we will talk about two big topics, one topic from Mark and one topic from me. And maybe at the end, we talk about also the yield farming challenge, but not on a regular basis, only if we made some adjustments. So we will try to rearrange this podcast in a way where we talk for 20 to 30 minutes in total about two topics where we have bigger interest, and so we basically adjusted the schedule away from our roughly 60 to 90-minute episodes to a little bit shorter one. And yeah, that's a quick update. Would you like to add anything, Mark, or do we want to jump in?
No, this is perfect.
Okay, okay. Do you want me to start with the portfolio allocation, or do you want to start?
I'll start. So last weekend, I think, or maybe the weekend before that, I took a snapshot of my personal portfolio, and back then it was roughly 54% IOV, which is Illuvium, 35% Bitcoin, 9% ETH, 2% stables, and since then I sold about 10% of my Bitcoin. Although it was not the crypto one, it was GBTC, but I still consider it part of my Bitcoin allocation. And I hold a little bit of cash right now. Um, yeah, those were the changes to my portfolio. So the main thing that happened in between, other than that, the value of all my tokens went down a lot, is that I got pretty wrecked in USD because I had all my stables on Solana and USD, and
Mm.
I didn't exit it until like 50 cents on the dollar roughly, or maybe 60 cents. So I lost about 40 to 50% of all my stables on Solana. And also I had an Astroport position on the Terra chain, and that got wrecked as well. So um, yeah, they had a new airdrop, but the airdrop was yeah, single digits, and I put
Mm.
in I put in 3 digits. So yeah, I lost it there as well. What
Mm.
about you, Patrick?
Um, it was a little bit challenging to follow your portfolio. Maybe before I tell my allocation. So can you give a quick summary on what your allocation looks now? Again, please. So
Yeah,
you
sure.
said
It's 54% ILV. And I mean, this is my portfolio back then, so it changed because I sold some Bitcoin. But
and that's my question. What does it look right now? So
yeah, I guess about 25%.
okay, 25% BTC,
Hmm.
55% Illuvium,
Yeah, and
and then
9% ETH and 2% stables, the rest cash.
cash. You mean euros,
Yeah, yeah, dollars.
dollars? Okay. Okay, so about 10% is stablecoins, and
Yeah,
I,
but it's
I,
not all in stablecoins yet. It's just sitting on a broker account.
yeah, I'm trying to get a rough estimation.
Hmm.
So it sounds like 25% BTC, 55% Illuvium, so that's 80%, and then about 10% ETH and about 10%,
Yeah,
let's say, stables,
yeah.
roughly. Ah, okay, understand. Yeah, cool. Thank you.
Okay, cool.
Um, for me, I haven't changed my locations, but my um percentages they changed because ETH is losing against BTC over the last couple of weeks. So for me, it looks like this. I have about 70% in ETH, about yeah 17% in BTC. Then I have about 2% in DFI, and the rest, so the rest, the 11% on stablecoins. Um, I lost about wow, 3 to 5% of my overall net worth due to the UST stuff because I didn't get out. I was basically on vacation and I unplugged and I was on the first week on my vacation when this happened and I thought, okay, either it goes back to pack or I will lose it all. And yeah, I was on vacation mode. It may have been better if I thought about it more deeply and get out of UST when it was at 80 cents or 70 cents or whatever. But that's hindsight 2020. So yeah, I lost a couple of percentages, but also much more because the crypto tokens went down a lot. But from a percentages point of view, I lost a couple of stable coins, which is quite uncommon to lose stable coins, I guess. But we all lost some stable coins. Yeah, that's it. That's it basically. Do you have a question?
Yeah, did you have any contagion effects of like things you were depositing, like that got liquidated or anything like this?
No, nothing. I'm totally uh just suffering under the whole collapse. So
Hmm.
BTC went down a lot, ETH went down a lot. Obviously UST went to zero, Maluna went to zero. Um, some other things also went to zero. Some IBC chains,
Okay.
for example, Osmos got wrecked a lot.
Yeah.
And yeah, I do have a small exposure to those small altcoins, but they got basically down like 95%. So yeah.
Mhm. Okay.
Mm. What about you?
I had money, not necessarily with the Luna thing, but when Solana went down, I was concerned that some of my things were getting liquidated because I had, a lot of my Solana assets in borrow lending protocols. But in the end, nothing got liquidated. But I was just wondering for
Mm.
you, since you have also some money in Friction and Chest and these kind of things, and I was wondering
Yeah,
how
that's
these were
true.
performing in this like the Luna
Yeah,
crash and
I
stuff.
lost a lot.
Oh, you lost money on these.
I lost a lot, yeah, because those puts they got exercised
Okay, I see,
obviously,
I see.
and I lost quite a few percentages.
Okay.
And I lost basically everything in my UST put secured puts
Yeah, okay.
because yeah,
But that's more like the base asset decline, but you also had some negative yield, I guess, on some of the.
yeah, a lot.
Okay, okay.
Some of those puts they had a minus 20% because yeah, it was just a bad timing.
Mm-hmm.
And if you, for example, put $1,000 into cash secured put and then get exercised with a low price, you basically lose like 20% of your collateral. That's what at least what I noticed. So all the yields are gone from those
Okay.
cash secured puts, but it's yeah,
Okay.
it's part of the risk, I guess.
Yeah, yeah, that's true. That's true.
Yeah, do you want to transition to the topics?
Yeah, sure.
Do you want to start?
Yeah, I'll start. So we can actually bridge from your topic into this,
Hmm.
because yeah. So I've been looking. I'm also like a little bit more like now a lot more risk averse right now than I was before the Luna crash. So I'm trying to find yields on stablecoins basically instead
Hmm.
of taking on, for instance, risk on LP pairs or some other things. So I want to
Hmm.
find safe yields where you have no impermanent loss that is decently high. And if you try to just stake your USDC or deposit it somewhere in single-sided deposits, then the returns are quite low, right? So I would say roughly 5 to 6% maybe for most things on Solana if you do USDC deposit.
Hmm.
And unless you take you go up the risk curve and you put it in friction or something, but then yeah, then you get wrecked once in a while.
Mm.
I also took a look at friction historical returns and on the stablecoins, and yeah, it's definitely like the sell the the short vol kind of strategy where you make a little bit of yield every week, and then once in a while you get wrecked,
Mm.
and that wreckage is more than
Yeah.
what you gained in 10 weeks. So I don't think necessarily that friction is a very safe place to put it. At least if you put
Mm.
it in the put vaults. They also have these other kind of vaults like um, the bear market, like how do you call it? The grab. They have a grab vault, right,
Mm.
for grab
Yeah.
market and these kind of things. I haven't really tested these, so this is more for the put secure vault, which is yeah their main product, I would say. So what I've been doing is I've been looking at the landscape of getting yield on your stablecoins, and what I find working the best was it is a little bit more. You take on a little bit more risk, but it's a different type of risk. Is if you supply certain tokens and then borrow other tokens and then supply those again somewhere else.
Mm.
So to give you an example, um, like let me see, what did I do today? Um, oh no, today I did something different. Okay, but like last week, for instance, what I did, I noticed that port finance, um, the yields on the port on the Solana lending pool, which is an isolated pool which contains all lending tokens like port, Larix, etc. So it was yielding like 80% or something high, but it has very low liquidity. Yeah? So what I do is then I supply USDC to port, and
Mm.
then I borrow port, and then I supply port to Solent, and then I get
Mm.
roughly, let's say, 20% APR. So I think because this is not something that is very easily found, because it's not simply like a single-sided just a deposit, right? So there's a little bit of extra yield you can get out of this because it's harder to do and harder to find these kind of opportunities. But they
Mm.
are there on Solana and also on other chains. So this is basically my main investment way right now. But you do take on risk, right? Because you're borrowing an asset that is risky and your supply is stable. So you have to keep track of the price. And of course, if it pumps, you get liquidated. So it's
Mm.
definitely not without risk. But yeah, I think the risk is manageable if you actively yeah check it, like check it every day or something. The odds of something pumping like 30% in one day in a bear market is not that high.
Mm.
So this is why I think it's reasonable to to pay the premium for this.
Would you get? Sorry, go ahead, please.
Yeah. No, no. This is one way to have safe returns in my view. Another way which is safe, but that one is, for instance, a lot easier, but a lot lower returns. Like it's just to supply stable pairs to DEXs. But I've been looking at the rates on different chains for this, right? And the rates are super low. So I think the premium is definitely worth it because if you look at the average rate for like a DAI USDC or some other stablecoin that are relatively safe stablecoins and not like DGen stablecoins, then you're looking at. I checked at all the chains like Arbitrum, Avalanche, Kronos, ETH,
Mm.
Phantom, Solana, etc. And yeah, it's like a couple. On most chains, it's less than 2%, and some
Wow.
chains it's like 4 to 5 maybe. But Solana is actually quite high the yields on stables. I think it's because people, Solana is not out of the scope of use most yield farmers because they use FIFAT and they are really used to using EVM tools or EVM chains. So Solana is kind of like, in my view, a little bit undiscovered in terms of yield farming. So the yields of stablecoins are quite decent there. And yeah, I want to keep it quiet, of course, but
Mm.
I think it's not that bad. But you had a question, Patrick.
Yeah, so I think it's really interesting that you make this how do you call it? Uh,
Yeah, I call it long,
lending
short,
and
borrow
borrow
lending.
long, short, borrow lending.
Yeah.
Hmm. You need to come up with a better meme.
Okay.
Because long, short, borrow lending can mean absolutely everything. What about arbitraging lending and borrowing rates? I don't know. I'm just thinking
Yeah.
out loud.
Yeah, I guess yeah, that is the case.
Yeah. I'm wondering, you said that it's pretty uncommon that a token pumps 30% within a bear market.
Mhm.
what, and this is a pretty technical question, a detailed question, what's usually your um, loan to value on those things that if a token would pump 10, 20, 30, 40, 50%, when would you get liquidated?
Yeah, so right now I'm mainly doing 75% of max loan to value. And of course it depends on the loan to value ratio, but it usually tokens don't get liquidated right if you hit the loan to value. It still has some kind of liquidation threshold above that, right? So I actually don't know the exact percentage because it depends on the
Mm.
chain on the protocol. Like the bar lending protocols, they have very different liquidation percentages and also different loan to value ratios, of course. So it needs to pump roughly 30 to 35%. So
Mm.
it's quite unusual. Of course, it happens, but you also control it because I don't borrow super degen assets. Uh, Sorry, Patrick. Can you hear me?
Yeah, you were gone for 5 seconds.
Yeah, sorry, my internet.
Just keep going.
Yeah, so basically, you don't you can choose not to borrow super degen assets, right? So
Mm.
if you borrow something like Sol or Radium, it's unlikely to pump 35% in one day.
Yeah, that's true. Yeah.
So this is how I also manage the risk.
Mm. Yeah, interesting. I would like to hear your opinion about a similar strategy.
Hmm.
And I can't comment much more on your strategy. I think it makes sense, and it would be cool if you can give our listeners in our next episodes and explain on how you actually find those opportunities.
Sure.
But I would like to hear your opinion about a strategy real quick, and then we can maybe transition to another topic um, to not make it too long. My question is the following. There are multiple ways out there in order to have, let's say, little risk exposure and get a nice yield, 10 to 20 to 30%. What do you actually think about this basis trade where you, for example, um, buy Sol on a spot? So you have, let's say, you buy 10 Sol and then you short 10 Sol on a yeah derivatives platform, and you collect the funding rate because you're basically delta neutral, but you're collecting the funding rate, and the funding rate is usually also in this realm of, let's say, 10 to 30% from my experience. What do you think about this in comparison to what you're doing?
Yeah, I think this is also a very valid strategy. I think it's usually probably even higher APR. It is a little bit harder to hedge it though, because yeah, you have to probably adjust your perpetual position and also when you yeah, basically, and also okay, the yield on your long is not very high because let's say you do Bitcoin or something or Sol. To get yield on your long, you just supply your Sol somewhere, right? So that part of the yield is not high. It is the perpetual that makes it high.
Yeah.
So the perpetual is also very volatile. So and it can flip occasionally.
Mm,
So yeah, I think it's definitely yeah, a good strategy. I think um, I think it can max out at higher APR
mm,
than the strategy that I do, but it also has more risk. Like um, it's a lot more likely that the funding rate goes against you than it is that the token pumps 35% in my case, right?
mm,
So the risks are a little bit different. But I think I think it's a perfectly valid strategy. And if you look at some of the protocols that do this, right? Like, doesn't Delta One do this? Delta One, for instance. There are
mm.
some protocols on Solana that do this.
Juice does it, I
Yeah,
guess.
Juice does it. Okay, yeah. So there, the yield is very, very volatile. Like one day it's like 100%, the other day it's like 6%.
Mm,
Yeah, it's very volatile. But yeah, I would say yeah, you need to have good technical skills to automate it somehow. I don't think you can do this
mm,
manually and keep it nicely. So yeah,
mm.
I think it's yeah, I think it's perfectly valid strategy and also very good. And I should probably dive more into it.
Yeah, cool. Let me know if you do it.
Hmm.
It was just a concept I picked up on a podcast again a couple of days ago, and I was
Yeah,
wondering how you feel about it. It's not the first time that we talk about it, but yeah, I would like to hear your up-to-date information. So yeah, thank you.
yeah,
Yeah, would it be okay if we transition to a
yeah,
topic?
sure.
Okay, so my topic is basically I framed it as a question, and I would like to start with giving you my opinion
Hmm.
about the question, and then I would also hear your opinion about the question. It's a question that I got quite a lot over the last couple of days when I got back, and it's basically yeah, what is the outlook for crypto over the next let's say couple of months? So let's say um how do we see the rest of 2022, and how do we play it from a portfolio point of view? I know it's a price question, and it's not a topic that is yeah, let's say that is super interesting, but I do get this question a lot, so I think it may be interesting for people. So I would just to throw it out there, and I know that quite a few of my friends and colleagues are listening to this podcast. So yeah, this is for you guys and girls, and also for other people who want to hear our thoughts. So I would like to give you my opinion.
Sure.
So the question is basically, how do I see the rest of 2022? And let's start with excluding the years 2023 and 2024, because this is a much bigger macro question and I can't predict the future. But I'm pretty sure, I not sure, but I do have a personal conviction on how 2022 will most likely look like. So this is how I will think about it. So we are at the 9th of June, and I think within the next 3 months, so June, July, August, um, there is a small likelihood that we will go up in prices, really small. I think I have not that controversial point of view, but I think I can summarize my thoughts real good. And I see the next 3 months the following. It all comes down to the Fed. There might be some black swans and some, let's say, white swans. The white swans, for example, would be that the Bitcoin ETF will be approved, or that the Russia conflict will get um, let's say resolved. But I think the likelihood for this is super small. So my base case is that over the next 3 months, the Fed will fight inflation, and they will do this by raising the interest rates, which is bearish, and they will also do this by decreasing their balance sheet, so they will sell bonds, which is also most likely bearish. So I think we will find a bottom within the next 3 months. We are not at the bottom right now. Maybe we are close to the bottom. Maybe we will again challenge the 24 or 25K BTC, and maybe ETH will go to 1.4K or whatever. So we might find the bottom there. If bad things happen, so let's say for example the Fed will be super bearish, and they say, okay, more interest rate hikes, and we will now offload our balance sheet more than the market thinks that it's priced in. But I think there's not that much more downside. Obviously I exclude black swans, like Terra was a black swan. And yes, I think the next 3 months will be quite bearish or sideways, more likely bearish, and we can retest those lows. But after this, I think we will have a couple of months. So let's say from September on to November, we may have 3 months of much of bullishness, and due to the fact that the midterm elections will come up. And I think this is the time where you, Mark, my friend, and I, we need to take some profits. And we need to forget about our 5 to 10 year time horizon for a short time and just try to take profits. I think we will go to 50, 60K BTC, not to 70, 80, 90, 100K. And I think as soon as we get to the 50, 60K, it's time to yeah, go into things where we can stay around for multiple years. Because I think the next couple of years could be quite bearish for investments, and I don't want to see my portfolio going down again like 90%, like I've seen it in 2018, 2019. Right now, my portfolio is down 70%, and it hurts a lot. But if it goes up again and then down to 90%, man, this would feel totally bad. So my plan is basically the following. For the next 3 months, I do feel that I have a good allocation. Then I hope that the prices will go up again, and then I will go a lot more into stable coins. Even I will also sell some of my ETH and some of my BTC to stablecoins, because I think after this somewhat bullish phase, we will go down, and most likely even more than we will go down over the next couple of months, and then reassess the situation at the beginning of 2023. I don't feel comfortable right now to make a bigger guess on how 2023 and 2024 will look like. I will play the next 6 months, and I feel confident in my assumptions right now. But if the facts change, my opinion will change. But for now, this is my game plan. And yeah, in summary, 3 months 3 month bearishness slash sideways from now on, then 3 months bullishness, and then again bearishness. But my plan is to stick to my portfolio right now. And if we go into a bullish phase and Bitcoin goes to 50, 60K, I will take a lot of profits in order to be at a position where I can play the market, whatever the market will bring us at the end of this year, going into 2023. I don't want to be fully exposed, and I don't want to be fully risk on or risk off. I want to be able to reassess, and this is my plan. So yeah, what is your plan, and would you like to comment on what I basically said?
Um, why do you think after Q4, like in Q4, you say prices will go up? Why do you think in
Mhm.
Q1 prices will go down again?
Because I think that the midterm elections will be a catalyst. And the midterm elections are at the end of Q3, at the
Hmm.
beginning of Q4, and afterwards
Okay, so after the president has
the
been selected, or like the new, not the president, but the new senator, right? I think it is,
yeah,
gets
they
elected.
so midterm elections mean that they are voting on the Senate and
Hmm. Yeah, yeah.
on the House. So yeah, it's something that the Democrats they won't. So just a really quick explanation. The House of Representatives gets voted every 2 years, and the Senate every 6 years, and this is called the midterm elections. And the Democrats are in how you call
They
it?
hold a majority in the Senate,
Yeah, exactly.
in
And
the House, I think. Probably.
yeah, exactly. And they want to make sure that they don't get wrecked. And I think they will call Jerome Powell and tell him, okay, please make sure that we don't get wrecked. And then they will show that they won't get wrecked, and then they are safe for a couple of years, and then they can go back to okay, we are mom and pop, and we wanna fight inflation, so back to rate hikes.
Okay.
Because the economy is fucking screwed. They
Hmm.
need to do something. But yeah, that's just my thoughts.
Okay.
What do you think?
Yeah, so for me, it's quite difficult because I read a lot of things on Twitter and also outside of Twitter. And there's a lot of people I respect that have totally opposite opinions, you know. So it's like whose side to pick. Um, yeah, what I think will happen, but yeah, I can see other cases as well. Is that yeah, I think personally, inflation is a real like commodity inflation, these kind of things. I think there will be a real drag on crypto prices. So it will be really negative pressure or like headwinds. And I think inflation will hold on and persist for a while. But what I
Mm,
think will happen is that the government will print cash to compensate for this inflation. Of course, they create even more inflation that way. But you're already seeing it, I think, in the UK, where they give people money to pay for their gas, and also in other countries. I think this will happen in the US as well on a broader scale.
when? When?
Um, soon, yeah, Q3, Q4.
Ah, so this year. So
Yeah,
you're talking about this, okay.
yeah. So I think it will deteriorate in Q4, and then they will do even more. But I think maybe in Q3 they will already start it. And it will already also be good for the elections, right? To give people free money. They're already also
Mm,
thinking about canceling student loans and these kind of things. So basically, I think they're even though they're not, you know, they're doing QT at the same time. I think they're also giving money to
QT?
people.
QT, can you explain this real
Well,
quick?
QT is quantitative tightening. It's basically the
Hmm?
process you just mentioned.
Yeah.
And yeah, so I think it depends purely on what people will do with the money that they get. So when they got this money for COVID, they put it into Bitcoin and ETH and all those kinds of crypto, right?
Mm,
But I'm not sure if they're gonna do it again. A, because they got hurt probably from that, some of it. If they put it in Dogecoin or something, they lost a lot, right? And B,
mm.
the costs for the average consumer are a lot higher, and their savings are a
Yeah,
lot
that's
lower, and their
true.
debts are a lot higher. So honestly, I think that they will use this cash to repay part of their debt or to buy something, to buy food or something else, basically. So I think crypto will be quite bearish for at least the rest of this year. I don't have that good of yeah a view on it in
Mm,
terms. The only scenario I can see, and this is what I call like Jack Cruz scenario, is that Bitcoin stays relatively stable, but money deflates. So Bitcoin stays the same. So Bitcoin goes up, but the money deflates at the same pace. So you
Mm-hmm.
will have like a very high inflation, but at the same time, Bitcoin is like it's like a kind of gold basically. So it compensates for the inflation by going up, and the price increase, so that compensates for the inflation. So this is
Mm-hmm.
what he expects, and he expects there's some kind of spiral where at some point people don't trust um, currencies anymore, and they go to to crypto for that. But yeah, I don't think this is very likely. But this is also a scenario that I can see happening.
Mm-hmm.
But yeah, I think that's very yeah. I think it's more like a doomish scenario, but it could happen. Yeah. So basically, this is what I think. So I'm relatively bearish.
Yeah, it sounds like an interesting and also valid theory.
Hmm.
So at least the one that if they print money, people will invest this money into buying bread and gas, and
Yeah.
not into buying GME, because the last time, so GME is
Hmm.
GameStop, and people had gas and they had bread when the COVID crash came. But this time, yeah, it's different. Inflation is real. Inflation is here. It's not just transitory. I don't know about the argument that Jack Cruz made about that it's an inflation hedge, basically. I don't know about this, but that's a bigger topic for now. So yeah, what about we wrap it up
Yeah. Sure.
and talk about this next week
Yeah.
or whatever is on our mind. I think there was some good topics today, and if people want to learn more, feel free to jump into our Discord. But for now, I think yeah, we can wrap it up.
Sure.
Okay, okay. Yeah, so guys, I hope you enjoyed this new format. It's shorter and it's also yeah, let's say more of a conversation starter. So like I said, jump into our Discord and a reminder again, just as a personal reminder, um, don't try to time the market, friends. I know you want to know when the bottom is in, and I know some of you got in when BTC was a lot higher. I got in when BTC was at a local top when it was 20K. Then BTC went to 3K. I basically lost everything. I just hodled, and yeah, in the long term, BTC went to 70K. I made a little bit of money, I guess, but I'm still holding. So yeah, paper gains.
Okay.
What I'm trying to say is that don't try to time the market, friends. Take a long-term perspective. Believe in it as asset class, and if you don't believe in it, don't invest in it.
Cool. And with that, see you next week, folks.
See you. Take care. Bye
Bye.
bye.